Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a look at the market, not only today, but also the week as well. And we did end on a high note, a little bit of volatility there intra-week, Ed, but seems like some pretty constructive action overall. And it seems also like it was the best month for the indexes since January. So we'll take it.
Yeah, it was ended up being a pretty good month, pretty good week, despite some really some wild times early on. I want to take a look at three stocks that are near buy points: AMD, InMode, and Dexcom.
All right, well, we'll take a look at those three stocks, but first let's check out the major indexes. Here is the NASDAQ, which closed up 0.7% on the day. And even though it didn't clear its early February high, it did have its highest close since last September. We also had the S&P 500 up 0.8% today. Same for the Dow, and the Russell 2000 outpacing with a gain of 1% today. So strong gains across the board. We got a shakeout. Looks like the NASDAQ could soon break out if this momentum to the upside continues.
Yeah, Tuesday's action pushed the market into uptrend under pressure. And, you know, because there was a lot of negative there and there's a lot of weakness further on, and we'll get into that later on, but there's definitely, so the indexes look better than some of the underlying situations. A lot of leading stocks came under pressure. We bounced back on the NASDAQ on Wednesday, sort of, but not great. That's with, yeah, not a good close. And that's with Microsoft up, I think, 7% that day. And it still didn't have a great day. Finally had more of a rally on Thursday and getting some breadth in there. And then today, modest gains, solid gains, and there was even better gains underlying the market. So definitely an improvement. It's definitely one thing, there's not as many leading stocks. There weren't too many that flash buy signals. I mean, there's always going to be some. So that's still an issue. It definitely looks positive. It does look, feels like it could be a shakeout, but we're right there at that level. Still a lot of news in the coming week that could change the narrative again. But definitely looks a lot better than when we talked on Tuesday. We were on this video on Tuesday. A lot better.
It was on the ropes. NASDAQ was on the ropes, and we, bounced back, rallied back. So you mentioned seeing strength underneath the surface, which is a change. It seems like this is a market where we've talked about there's a lot of cross currents, there's a lot of mixed signals. So it's not like we're getting rid of the mixed signals. It seems like the mixed signals continue if it's a market that is under pressure yet closing at its highest levels in a number of months here, Ed. But one thing that we did see change underneath the surface, what you mentioned, is the participation. So a look at QQQ up 0.7%, and then QQEW today up 0.9%. So that's encouraging, right?
Yeah, that was definitely encouraging, because as you saw that even on Wednesday, the QQEW was down, went through these moving averages. So that was showing you how bad the breadth was. So even as the NASDAQ rose, I think the advanced decline line for the NASDAQ hit its lowest level in probably a year. So it was really, really grim action in that regard. So nice to see the QQEW bouncing back. Since it wasn't just the mega caps, because it's like, oh yeah, Meta's great. Microsoft's great, but it's anything else rising. And for a while there, it felt like nothing else was. There's also we can look at the S&P and then RSP. There's a similar dynamic going on there.
So there's SPY up about 0.8%, and then RSP almost 1.1%.
Yeah, and the RSP, again, showing the weak breadth. It had come down. It was, a few days ago, like at the beginning of the week, it was above the 50-day line and 200-day, and then it plunges through that, but it's come right back up. So again, if we can get above at least those short-term highs, it's still obviously not outperforming the way it's still lagging the S&P over the last, few months. But if it could just get above those levels, you could imagine some more buying opportunities popping up, in that situation. Obviously, we'd probably be seeing the indexes hitting new highs as well. But then again, we've been here before. I mean, look, again, just I guess calling up the S&P or the NASDAQ and just look on a weekly, it's been holding up there. It's like we're poised to maybe do something, but we keep on hitting resistance. It doesn't mean we have to. We could hit resistance and fall back. we did that earlier in this week, we could have a more sustained one. We still have lots of earnings. We still have the Fed. We still have big economic data. First Republic, maybe there's a resolution. I mean, that could go positively, but I mean, the market doesn't have to react positively to it. So still a lot of things that could happen, but I mean, we've been saying it, but we seem to be at a turning point, but we can't quite seem to turn, you know, and we've been there for several weeks.
Yes. But if you know, thinking about the positive case here, we got to think about all the potential outcomes that could happen and act accordingly. But instead of just like how, you know, you always say, well, a cup with handle is better than a cup breakout because you have that shakeout. So if these past couple of weeks, you know, that coil has just been tightening, that could help fuel a rally, at least a short-term one would think.
Yeah, and it might even be, I agree, and I think it could even be set the stage for a longer rally, just because if you can get this with all the earnings out of the way, maybe the last Fed rate hike, maybe with the bank crisis finally out of the way and clearing all these levels, you could see a decent gain. But yeah, this could be the beginning of something really great, but we're not quite there yet.
Yes, the stars could be aligning. We'll have to see. Okay, and here's a look at the Dow, an outside week upside reversal for the blue chip index, now back at that 34,000 level, poking above it. A lot of action that we've seen around 34,000 going back into last August as well. And then we also want to take a look at IWM, which did outpace the broad market today, but just with the weight of the banks, I mean, that's really what's in control of this small cap index right now.
Yeah, and combine that with the fact that small caps pretty much by definition don't have any tech titans in them.
Yeah, gonna underperform. Or have the swings with the banks. Okay. And now let's take a look at ITB because we've been keeping an eye on home construction. And along the way, we've had some shakeouts here, Ed. It looked like a buying opportunity on 331. Then we got a shakeout. Then we got a breakout to highs. Then we got another shakeout. Now we are taking another stab at making a move higher, but this is certainly a group that's had an impressive move, even with the shakeouts along the way.
Yeah, and a lot of builders and a lot of related stocks doing quite well. Not many are in position right now. A lot of them are doing quite well, but this is definitely one to be watching for pullbacks or other buying opportunities.
Okay, let's also take a look at XLV. How did healthcare fare this week? Down a little bit on the week, 0.6%. But if you look at the daily chart, you can see a little bit more granularity as to what went down this week. It finished off the week strong, even though it had a big gap down. In the middle of the week, we did see a number of those major healthcare names selling off and then seemingly bouncing back by the end of the week.
Yeah, definitely a lot of those drug makers in particular, and those bounce back. And there's a lot of medical products, a lot of those kind of things that are doing pretty well. So this is definitely seems to be one of those sectors that has a lot of potential buying opportunities.
All right, we will keep an eye on it. And you know who really has a close eye on this area? That is Ken Shreve on our team, and he covered a number of medical-related stocks in this week's Investing with IBD podcast, which dropped yesterday. So check that out over the weekend, investors.com/podcast, or on our YouTube channel, or at investors.com/videos, wherever you'd like to consume your content. And now let's take a look at SMH. Chip stocks have been a trouble spot. Are they now finally making a comeback here? Did look quite strong on Friday with a gain of 1.7%. So definitely outpacing the broad market gains, but not before some pain was involved earlier this week.
Yeah, a lot of the big winners from the earlier of the year, those have sort of broken down. There was Mobileye, which had just its big sell-off. I mean, it tried bouncing back, but that was ugly. So it's sort of a changeover. It's even though the SMH is coming back, it's like, okay, there's some chip gear makers that are coming on. NVIDIA's holding strong, and that's great. And then there's AMD, which we'll get to. That AMD looks a fair amount like SMH.
Yeah.
to like maybe just a little bit better, but it is an odd mix. It's with SMH, so definitely there was a lot of pain in this one, and some of the leadership may be changing here.
Well, since you mentioned AMD, let's go there, Ed. So it broke out. This was in mid-March, had a nice run. Definitely looks like it went up more than 10%. Then it looked like it was going to find support at the 21-day, couldn't do that. Then it looked like it was going to find support at the 50-day and the buy point. It couldn't do that. It's now finally trying to find some footing, but it seems like, this is potentially the bottom of a new base at best. What do you think?
Well, I think there's still that sort of a trend line there with the 21-day line. I wouldn't want to do anything until after earnings, though, unless you're doing an options play, because that's coming Tuesday night. So who knows what'll happen with that? But it seems like that would be a place that could be it. But see, that's one of the things. It's like, sometimes in the hindsight, things will look great. This is going to go. But as you say, there was, it's going to find support here. No. Here, it's going to find support here. No. So if it can get through the 21-day line after earnings, that would seem like it would be an early entry. It has the old buy point that it would still be around, which is no longer valid really. But with that in the emerging base, I think that'd be a place. Again, if this gaps up 12%, that's a different story. So, but I think this is definitely one to watch. I think it's really important for the chip sector that something other than NVIDIA is really marching higher. So I think that'll be a big one for the market rally.
Do you think that NVIDIA would move up in sympathy with AMD if AMD has a strong report? Or since they are such rivals, I feel like there have been many times where we see them move in opposite directions. So if there's something good for NVIDIA, maybe negative for AMD and vice versa. But what do you think we might see on that front?
Yeah, it can depend if they're saying that we're grabbing market share in, say, graphic chips or AI, then that would be a sign, be maybe bad for NVIDIA. But if they say we see a tremendous opportunity in AI, that's probably bullish. It also, if they're starting to say if their strength comes in PC chips, well, that doesn't really matter for NVIDIA. I think one reason why AMD came up today is because Intel, there were some positive vibes on Intel. It wasn't like a great report. It wasn't even great guidance, but it was like maybe a bottom is coming in PC chips. And so that was enough to bolster Intel and maybe AMD on that front. So yeah, it'll definitely be for NVIDIA investors. This is like, we're not going to get any other reading on NVIDIA for a few weeks. So I think it really will be important on that too.
Yes, such great points you're making there, Ed. Okay, next on our list is InMode. We've been tracking this one all week, whether it's with our Market DM newsletter, looking at potential option trades, or maybe even a stock of the day. We've been covering it a lot as it trades tightly heading into its own earnings report next week.
Yeah, and again, this is one I wouldn't do anything with until earnings, unless you're doing an options play. But yeah, it's been trading tightly. One thing is, I did give preliminary numbers at the beginning of that handle that gapped up because that was preliminary numbers that was pretty strong. This one turning around in that front, I think you're starting to see the estimates come back up. This is probably not going to have that massive run that it's had before. Just because the growth rate isn't going to be as strong as it once was, though it is looking to have new opportunities. But this one has been trading pretty tightly. Looks like it, if it's not a 3 weeks tight, it's pretty close to it. And it doesn't really matter. It's been definitely trading well past couple of weeks. And it's just, this is a sector that's been doing pretty well at the medical systems, medical products. These are areas that are strong parts of the market. And so this is one that's actually near a buy point.
And it seems like the area where it's trading under right now is pretty significant, around 38, because it doesn't have it poked above it in the middle of a number of weeks, but didn't really ever close above it, other than maybe one of those weeks. So we'll have to see if it can get above 38 on its earnings report, and hopefully that could clear the way for higher prices. But we will have to see. One to watch. And Dexcom, DXCM, is another medical stock worth looking at. It had earnings this week. It was trading pretty tightly heading into the report, backed off of those levels after the results came out, but was able to close well off lows.
Yeah, so the past couple of days didn't really seem to trade pretty well in terms of the price action ultimately. So there was high volume, but it wasn't like it was these big sell-offs. And honestly, when you see that up and down, it's had a tendency to move up and down in this base, up and down to the 50-day line or beyond. So falling intraday to the 21-day line and bouncing back doesn't seem, it seems like a shakeout in this situation, because it was sort of a wedgy type of handle-like thing going. It wasn't a handle, but it sort of had that vibe. So, you know, if we'll see. Now, this one may not, you know, perform, but if it does come up, that might be an opportunity to get on board. It has, you know, pretty strong growth seen over the next year. You know, this continuous glucose monitor, you know, the latest one they have, it's getting a lot of, it got the FDA approval, it's getting Medicare approval, it's got that long consolidation, not super long, but a longish consolidation area. And so that would be an opportunity there. What's nice is earnings out of the way. So that's, I mean, we've seen so many big blow-ups. I think that is something to be thankful for. So if this does break survived, it won't be as, you know, like if it does, you don't buy it until it breaks out, and then the news is already in the hindsight, and it's also, you'll have an opportunity. This isn't going to gap up presumably 15%, and then you go, well, what am I going to do with that in this kind of market? So so that's something else to be looking for. I know I showed you two other stocks that have earnings coming up, but there's also, I would put a premium on stocks that have already reported.
Great. All right. Well, speaking of, now let's turn our attention to next week. We're going to get more earnings reports. Like you said, more data coming out, more headlines that we need to be aware of. But it seems like we should be updating our watch lists just because the market uptrend was downgraded, or the market outlook rather was downgraded, and it was warranted for investors to be peeling off a little bit of exposure in the middle of the week, because like we said, the Nasdaq was on the ropes there, and you know, we can't just bank on strong earnings from a couple of big companies to fuel the market. But with that being said, now that we're seeing a bounce back, we should be sharpening our pencils again.
Yeah, it should be sharpening the pencils. Definitely cast a wide net, because you don't want to be, I mean, if you were just thinking tech, there's not much out there. I mean, medical products, building materials, there's various other names. You want to be looking for leadership across the board and finding that. And if we do have strength, I would probably encourage people to add exposure gradually. We've had a lot of big shakeouts and stuff, and it makes it easier to either hold if you haven't taken big positions and haven't really ramped up exposure, or if you decide to back out, well, you haven't lost that much either. It's just not a market to get pedal to the metal. It's like road conditions. It's not an open highway. It is sort of I wouldn't say it's an icy mountainside cliff, but it's something that you want to be paying attention to and just be careful driving, as it were, as you navigate until now. Maybe you'll clear this out and we get to open highway, and then you can start hitting the pedal. But that's not what we're in right now. Right.
It's almost like a video game roadway. You know, there's going to be some banana peels to steer around. You may get some boosters to where you can go a little faster, but there's a lot to navigate on the path. So we'll leave it at that. Thanks so much, Ed, and thanks everyone for watching. We hope you have a great weekend, and we'll be back with more starting Monday morning on IEBD Live, investors.com/IEBD Live for all the details on that. But in the meantime, make sure you're keeping tabs on investors.com throughout the weekend for all the latest from Ed and the rest of our team. So we will see you back here on Monday. Thanks, everyone. Have a great weekend.